In this video, we will show you instruments you can trade for high profits. We will show you why index futures such as S&P 500, Nasdaq will give you high profits and what CFD in Forex, stock, crypto you can trade for high profits. You can trade any instrument of DAX, Germany, FTSE, UK, TradingView symbols, M for micro, NQ for Nasdaq, TradingView charts, if you type MNQ, if you expand, can exit the trade at a profit. For scalping or day trading, the reason is you can trade them from anywhere in the world. If you are a new trader, then in Forex, we prefer Euro USD and EUR USD chart for the crypto price action concepts we teach in this course can be used to trade any instrument of your choice. $20 per contract. If you are a new trader, you should start trading. Should you trade the U.S Index stock market or your country's local, it's easy for you to make profits. So what are trading instruments? What instruments can you trade? The price action concepts taught in this course can be used to trade any instrument of your choice. It can be index futures, index CFDs, Forex, stocks, crypto, etc. Okay, let's look at what are index futures now. So what are index futures? So what are US Index futures? So US Index futures are E-mini S&P 500, Micro-mini S&P 500, E-mini Nasdaq, Micro-mini Nasdaq, E-mini Dow Jones, Micro-mini Dow Jones and anything in this list. Then as said earlier, you can trade any instrument of your choice using the knowledge in this course. Then what are global index futures? You can also trade global index futures such as DAX, Germany, FTSE, UK, Nikkei or anything in this list. And again, as said earlier, you can trade any instrument of your choice using the knowledge you will be gaining in this course. Okay, let's look at contract delivery months and expiration dates of index futures now. Okay, so what are contract delivery months and expiration dates? Now, if you take these US index futures such as S&P 500, Nasdaq and Dow Jones, each of them has contract delivery months and expiration dates. For example, there are March contracts, June contracts, September contracts and December contracts. So each of these contracts will expire on the third Friday of each delivery month. What that means is the March contracts will expire on the third Friday of March. Then the June contracts will expire on the third Friday of June. So what that means is, say for example, if you are in April and if you want to trade these index futures, then the March contracts are expired. So your choice is to trade the June contract. So you will be trading the June contracts, let's say on April, May and June until the third Friday of June. And then you will roll over into the next contract, which is September. So this happens every year. At this stage, you don't need to understand these in detail. You will learn more when you progress in this course. Okay, let's look at index futures symbols now. Okay, so let's look at index futures symbols starting from E-mini. So the TradingView symbols for E-mini S&P 500 futures are what is listed here. Then it depends on the contract delivery month. So the March contracts are having the letter H, June will have letter M, September contracts will have the letter U and December will be Z. So if you want to trade the March contract of E-mini S&P 500 futures, let's say in year 2025, then you have to load the symbol ESH 2025. So how that is made is ES stands for E-mini S&P 500 futures, then H stands for March, then whatever the year you are. So if this is in year 2026, you will put 2026. So let me give an example. Let's say you are in April of year 2025. That means you can't trade the March contract because it's expired. Now you are in April. Then your choice is to trade the June contract. So then what you will load as a symbol when you are trading is ES, that is for E-mini S&P 500, M for the June contract and for year 2025. Let me give another example. So let's say you want to trade E-mini Nasdaq. So let's say now it's the month of July in 2025. In that case, the June contract is expired. So your choice is to trade the September contract. So when you trade in TradingView, you will load the symbol NQU 2025. NQ is for Nasdaq, U is for the September contract and the year 2025. Then you will keep trading this September contract until third week, meaning the third Friday of September, and then you will start trading the December contract. Usually you trade the most immediate contract to expire. This is because that is the one which will be most active and has the highest volatility and liquidity, because as traders we need the highest volatility and liquidity if we are to trade and make profits. Okay, so we are on the TradingView chart. So you click on over here and you can search the symbol. So you have to select the all category. If you type MNQ, if you expand this, you can see the next available contracts. So you just select this and it loads that chart. So loading of these symbols into charts and how to trade them will be demonstrated in a different lesson after this. At this moment, just get the idea of these symbols. Then let's look at the symbols for micro E-mini futures contracts. So the concept is the same. The only difference is there will be letter M in front compared to what I said earlier, just to say these are micro contracts. So let's say, for example, you are in October year 2025 and let's say you want to trade micro E-mini Nasdaq index futures. So because you are in October, now the September contract is expired. So your choice is to go for the December contract. So you have to load the December contract in TradingView or any platform you are trading. So what you do is you will say MNQ, M for micro, NQ for Nasdaq, Z is for the December contract and whatever the year you are in, 2025. So if you are doing this in, let's say 2026, you will put year 2026. And the rest is the same as I explained in the earlier slide. Okay, let's look at index CFDs now. So what are CFDs? CFD stands for contracts for difference. So what are CFDs? They are financial derivatives that allows you to speculate. Speculate means predict. Speculate on the price movements of assets without owning the underlying asset. So you can speculate the price movement, whether the price is going up or down, but you don't own the asset. That is the most important point in CFDs. For example, when you trade CFDs, you are entering into a trade and you profit or loss based on the difference in the price of the asset between the time you open and close the trade. So what that means is, for example, if you open a buy position and if the price goes up after you buy, then you can exit the trade at a profit. Then if you open a buy position and if the price goes down after you buy, then you will exit your trade at a loss. Same for sell positions. If you open a sell position and if the price goes down after you sell, then you can exit the trade at a profit. And if you start a sell position and if the price goes up after you sell, then you will have to exit the trade at a loss. Now the most important thing to note is, in all these trades, you will speculate on the price movement of the asset. Speculate means you will either trade it to be going up or down, but without owning the underlying asset. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So there's no ownership in CFDs for you. You just speculate. So you can trade long or short. So if you take a long position, you will profit from rising markets. If you take a short position, you will profit from falling markets. Then you can apply CFDs for a wide range of instruments such as indices, Forex, stocks, commodities, crypto, etc. Again, at this stage, you don't need to understand these in detail. You will learn more when we progress in this course. So what are index CFDs? So U.S. Index CFDs are again S&P 500, Nasdaq and Dow Jones. Now, index CFDs are not available in US due to regulatory restrictions. So retail traders in US must trade either futures or ETFs if they want to trade indexes. As said earlier, you can trade any instrument of your choice using the knowledge of this course. So what are global index CFDs? You can trade DAX, Germany, FTSE, Nikkei or any of these in the list. Again, as said earlier, you can trade any instrument of your choice using the knowledge in this course. Okay, let's see what's next. So the golden question is, should you trade index futures or index CFDs? What to trade? So for scalping or day trading, use micro E-mini index futures or E-mini index futures. The reason is you can trade them from anywhere in the world, including US. You can be from any country with the exception of a few countries. These are preferred by many traders around the world because they are highly volatile, highly liquid, and very well regulated. So if you are a new trader, then use micro E-mini index futures because you can risk less amount. We will explain that after this slide. At this stage, you don't need to understand these in detail. You will learn more when you progress in the course. Okay, let's look at Forex pairs now. So, what are Forex pairs and Forex CFDs? So, if you are trading Forex, we prefer trading the below two pairs, which is Euro USD and GBP USD, because they are very volatile in the London and US sessions, and these are two of the pairs which is highly traded by traders around the world. Also, you can trade any of these pairs listed here or any other Forex pairs. And as said earlier, you can trade any instrument of your choice using the knowledge of this course. Let's say you want to trade Forex. So what you do is you click on this and you type the pairs, let's say EUR USD, and just select, say for example, forex.com, doesn't matter, just click on it. And this is the chart for the Euro USD Forex pair. Okay, let's see what's next. So what crypto assets can you trade? You can trade any crypto asset including Bitcoin, Ethereum, XRP, Sol, Doge, ADA, TRX or any other coin using the knowledge you gain in this course. Because the price action concepts we teach in this course can be used to trade any instrument of your choice. Okay, let's look at price movement measurements now. So, what are price movement measurements? So, when price moves, we have to measure that. So, if you take index futures, the price movement is measured from a unit called handles. So, in trading, one handle equals to one full index point. What that means is, let's say if the E-mini S&P 500 index move from 5000 to 5001, that is considered as the movement of one handle. So, one handle is equal to 4 ticks. You will see this more when we do real trading examples. Then, if you take E-mini S&P 500 as example, one handle movement is equal to a dollar value of $50 per contract. What that means is, when the S&P 500 moves by one handle, the dollar value is $50. So, for example, if you are in a trade and if you are holding one ES contract, a move of 1 point up will be a gain of $50 for you. A move of 1 point down will be, let's say, a loss of $50 for you. Again, it depends on whether you are in a long position or a short position. This is given if you are in a long position. Then, if you take E-mini Nasdaq, one handle movement is equal to $20 per contract. Micro E-mini S&P 500, one handle is equal to $5 per contract. Then, if you are trading micro E-mini Nasdaq, one handle movement is equal to $2 per contract. You can see out of this list, micro E-mini Nasdaq is having the lowest dollar value per contract. So that is why if you are a new trader, you should start trading micro E-mini Nasdaq index futures because you can risk a less amount, and if you lose, you will lose a less amount. So don't worry if that is not clear because we will show that in future lessons with real trades. Then if you are trading Forex, the price movement is measured from pips. At this stage, you don't need to understand this in detail. You will learn more when you progress in this course. Okay, now let's look at, should you trade the US stock market or your country's local stock market? So the golden question is, should you trade the US Index stock market or Forex crypto markets or your country's local index or stock market? Well, using the knowledge you gain from this course, you can trade your country's local stock market. That means if you are in China, you can trade the Chinese market. If you are in India, you can trade the Indian stock market. However, if you trade US indexes, stock market and Forex and crypto, then there's a chance where you can gain more profits. That is due to traders all over the world trading these instruments. And hence due to that, it's highly volatile and highly liquid. So this is what we want as traders, to trade and make profits. So if you can trade an instrument which is heavily traded by around the world, that is where it makes it easy for you to make profits. So we at Trade Oxygen focus US trading session and London trading session financial markets, where you can also trade from anywhere in the world. So when you say these financial markets, what we mean is US Index, US stocks, or Forex, crypto markets. In this course, we will use index futures as a medium for us to teach you price action and for trade entries. However, as said earlier, you can trade any instrument of your choice using the knowledge of this course, any US instrument or global or any of your country's local trading instruments. Okay, so this is summary of what you discuss in this section, and with what we discussed, you now have a overall idea of what instruments are best to trade for high profits. And in future videos, we will show you how you can take real trades using these trading instruments. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's the end of the video and we will see you in another video.